Hey everyone, welcome in to another daily editorial here on the KE Report. Getting an update from Vizsla Silver. This is more of a news recap for the month of May as the company has ongoing a 30,000 plus meter drill program. We had some results from the Napoleon area and the La Luisa area. Also an update on the royalty spinout and a little look ahead to the PEA coming in Q3 of this year. Chatting with Mike Connor, President and CEO of Vizsla Silver, traded on the TSX Venture Exchange under the symbol VZLA, and on the NYSE American also under the symbol VZLA. Mike, let's start with the drill results. Results, as I said, from Napoleon and La Luisa. I believe it's expansion of both of these areas. Let's just start off, broad picture. These drill results, what did they do in terms of expand mineralization and potentially de-risk some of these areas?
Yeah, exactly. So there's some expansion of the known high-grade areas in this drilling here, and in particular, at Napoleon, we had some extremely high-grade results, almost 2.5 meters at 2.5 kilos, and a number of over 4 kilogram silver equivalent intercepts over good widths. So this shows a bit of a treasury box area, jewelry box area. So that's very exciting for us here at Napoleon. La Luisa continues to grow, and we're thrilled about that. And this is all part of an ongoing 30,000 meter resource conversion and expansion drill program that we're doing here this year. Really, what this does for us is that it feeds into a mine plan and feeds into higher confidence mine plan resource areas here and eventually getting into reserve status. So this is all very important for the next steps of the company as we go from the upcoming PEA into a feasibility in the future.
So, Mike, also in terms of future drilling, one thing that came from that news release in the La Luisa results, May 8th, that news was released. The news release highlights that you've now identified 2 potential feeder zones within a target depth horizon, which you say you will test in the near future. Can you give us more information on this?
So that's really exciting for us. There's so much here for us to explore. There's so many opportunities for us to grow known resources along strike and at depth and trying to find feeder zones like we talk about in this news release here. But there's also a number of very high potential drill targets and potential exploration targets for us throughout the rest of the district as well. So we need to rank and prioritize these opportunities, but I would wager that the potential feeder zone at La Luisa would rank very high on that list. So we're thrilled about that. Basically, what we're doing is moving further through the year here, moving towards the PEA. Once the PEA comes out and we start the test mining, that'll be a perfect time for us to go outside of this infill drill program and go into exploration and a combination of expanding known resource areas outside of the block model, like we're talking about with the feeder zone here, or expanding Napoleon in certain areas and Copala in certain areas, but also for us to go and look further afield for new centers of mass. I'm particularly interested in the southeast part of the property, the northeast part of the property, and then in the middle area, the central area of the project, we have a couple of other centers of mass that look to be growing as well. So I think that the exploration program that we're contemplating, that Jesus and the team are working on, basically that'll be informed by the TerraSpec and the electromagnetics, as well as some other programs that we're doing, which we refer to as our low unit cost exploration. That will inform the next steps for us for exploration, and that'll happen later in the year.
Okay, it's something you've highlighted a lot is that you have a lot of other areas to explore on this project, but the focus, which has been driving the company, has been on this center of mass, the original one that you have found here. As you said, you're working towards a PEA and test mining. What still needs to be done for that PEA coming next quarter?
The PEA basically will inform a lot of that test mining, and in order for us to complete the PEA, the biggest part of that is actually the mine planning. That's the area that we're focusing a lot. A lot of companies could take the resource that we have and put together a theoretical mine, theoretical processing facility, a theoretical mill, and just put it in a place that looks good. But what we're doing here is actually going and doing the trade-off studies, doing the site tours with consultants to understand the implications of one site location versus the other, the implication of one adit versus the other, and really trying to maximize the return on investment. We're focused singularly on high ROI, and trade-offs help us understand what creates the highest ROI. And that's the work that we're doing right now. And so there's probably a good 24 consultants, various groups that are working on this tirelessly right now, pushing towards that Q3 target that we've talked about in the past.
Mike, can you give us any insights on the size considerations that you're having, that you're running through for this PEA, just in terms of how big of a mine this could be?
Well, Michael Gray has done a great job in his research at Agentis. So if anyone is interested in that, I'm sure that Agentis, if you were to email them, they would send that. Or if you were to email us here at Vizsla, we would be able to send you some of that research. But essentially, what Michael Gray has demonstrated through his research is if this were to be built right now, it would be in the top 8 silver primary producers in the world. So there's a range that we like to give between 15 and 20 million ounces. We think that's achievable. That'd be 15 to 20 million ounces of silver equivalent annual production. In order to achieve that, you'd be looking at something around 1 million tons per annum.
All right, Mike, I appreciate that. So again, eyes on the PEA coming up, and then that will inform test mining. The royalty spinout update that was released May 22nd, along with the drill results from the Napoleon vein system. Take us through some of the updated info you can give us on this spinout of the royalty.
Well, everything is proceeding very nicely, and I think there's a lot of investor interest around this spinout. It looks that it's going to create a lot of value for shareholders. And so, what I've been seeing, and we just returned from a marketing trip in Europe, and a lot of people that we talk to have become shareholders, not only for the re-rating potential that the PEA will create. And as a side note, we did a bit of research on peer company performance post PEA, and it looks like as a group, the peers re-rate almost 40 to 50% after the PEA is published. So many investors are looking at the shares right now, and although they've been moving upwards here, probably closer to the value that we think is real, I think there's a huge move left potentially for the company as we publish the PEA and are able to demonstrate project economics. So the combination of the free share dividend from the royalty spinout that's proposed. Of course, we need to move through the shareholder vote, but that's all moving very well. And the potential re-rating with our massive milestones that are coming up here, I think a lot of shareholders are seeing what I always say, which is that this company is criminally undervalued.
So, Mike, just circling back around to that 30,000 plus meter drill program, how far are you through it? What is the path then right now? Balancing out infill, which needs to be done, but then starting exploration, as you said, after the PEA.
Well, what we'd like to do, and the purpose for this infill drilling right now, is to ensure that the project is in good shape for debt financing. In order to do that, what debt providers want is a mineral inventory. So we are about halfway through this infill drill program. That infill drill program will ideally create a reserve, higher confidence resource category that shows 1 or 2 years of basically high probability or high confidence mineral inventory that we can put into a model. And that essentially will allow the debt providers to model the mine here, and I think see what we likely see here, which is quick payback and a lot of upfront cash flow in the first few years. So the goal for this drill program is to get that out of the way as soon as we can, publish the PEA. A lot of the work that we've been doing has been at a feasibility level, so we're actually working towards this feasibility already, and then that will go into that study. There's a lot of work like detailed engineering and things like that. But the goal is to put that feasibility out in 2025, which is relatively aggressive. So this drilling really needs to feed into that, and that's what we're aiming on. Once that drilling's done, it should be about I would say, the next couple of months here, and then we can focus back on exploration, drilling, and discovery. I think Vizsla has a number of discoveries left in it still.
Okay, so right now it is this de-risking work as you're really growing up as a company from just an exploration company to potentially development, construction of a mine. When you do get back to exploration, how do you balance out the other potential centers of mass on the project with some of the other acquisitions you've made? And also considering that you could just go back and continue to expand on known resources.
Well, there will be a couple of I should say there's a tiered approach to this. So certainly there will be ongoing drilling and exploration in our known resource areas that will continue to grow those resources. As a second tier, that'd be the first tier. As a second tier, going and making new discoveries and scout holes, basically to build up our confidence around new targets. And then once we've satisfied the exploration programs at the near mine areas, let's say, in the West, we can go and build bigger resources around those discoveries. And then tier three would be everything else, which would be mapping, sampling, and going to these other new additions of the concessions to the south of us, generating new targets there. But it all has to make sense in an ROI basis. So what we want to do is make sure that we're not spending a ton of money somewhere that'll never be of importance to the company. But we also don't want to leave ounces out there that are low-hanging fruit that can be discovered, because that also creates value for shareholders as well. So it's a bit of a ranking and prioritizing exercise. It's a bit of a balance. You asked about the other acquisitions. So the two concessions to the south that we've added, that added about 10,000 hectares. I would consider that to be part of the property map that we have here in the Panuco district proper, let's say. But the Lagara Metates district to the north, that's something that we acquired to think generationally. So we see almost like a Panuco 2.0 to the north. That will be worked up over time. Low unit cost exploration. Of course, we're flying that EM and the TerraSpec that'll be incorporated into the program that we're taking very shortly here on the Panuco project, and then we can start to work up new targets there. But Lagara Metates has never been drilled. I think that there's probably a number of really serious walk-up targets for us to drill there. So in the coming years, let's say, I think that's probably fair to say that we could start a major exploration program at Lagara, but the San Enrique and El Richard to the south, those are areas that I think would be incorporated into more near-term exploration programs.
All right, Mike, thanks for addressing that. Let's wrap it up by a quick overview in terms of cash. How's the company doing for cash? What's the type of run room that this gives you?
So we've actually had some inflows recently here with warrant exercises and some option exercises. So the cash is really hovering around that 40 million, 40, I should be very clear, which is great. So we're in an excellent position. We've also slowed down a lot of that spending, and we're focused on making the cash last likely until feasibility into 2025. So we don't have to do any financings. We're not contemplating any financings here. And I think the share price has a lot of room to run.
Okay. Mike, thank you very much for the update here. Everyone, please keep sending me your questions. I'll get Mike to address those on the back of some more news and for some of these monthly recap calls that we do. I'll also post a link to the Vizsla Silver website so you can read over all that recent news. Mike, again, thank you very much for your time.
Thank you, Corey. I appreciate it.